Okay, we are ready to get started. I am very excited to kick things off. Think of me as your MC today. I am going to be introducing our esteemed panel, and I couldn't be more excited about today. Hot trend, home equity. We've invited our partners at Coviance to join us today. And I'm going to go ahead and introduce myself first. I'm Rich Goldman. I'm the CEO and founder of a company named Competiscan. We capture the direct and digital marketing sent to consumers, business owners, mortgage brokers, and financial advisors. And what you're going to see today for part of the presentation are some of the statistics and analytics and insights that we've gathered via our longitudinal panels. Next, we have Omar Jordan. He's the founder and CEO of Coviance. And Coviance is a fintech that's transforming the home equity lending process for lenders and borrowers. Coviance was recently included in the Inc. 5000 list of the fastest growing private companies. So welcome, Omar. And then also we have Jill Skinner. She's the Chief Marketing Officer at Coviance. And she's got over 2 decades of experience in driving transformational growth. She successfully led the recent rebrand of Coviance and the go-to-market strategy to fuel next level growth. Previously, Jill served as the Senior Vice President of Marketing at Wells Fargo, where she held leadership roles in home lending and deposit marketing. And last and certainly not least, we have Cassidy Alginus, and she's a senior analyst at Competiscan, and she has been with us for 2 years, and then additionally, she has 4 years in the commercial finance space, and her area of expertise is specific to the lending industry.
Rich, we're getting some feedback that there's no sound. Jill and Omar, can you hear us?
We can hear you.
We can hear you. Rich, I can't see you, but I can hear you.
Okay. Cassidy, can you see me okay?
Yes.
And Omar?
Yes.
Okay. If there are any technical difficulties, please let us know. I'll also mention that we are going to be recording today's session. So if you're really having an issue today, anyone that registered, we are going to be sending out slides. And we are also going to have a recording of today for all of you. And I also wanted to mention we have over 200 attendees today, which is pretty awesome. We have all kinds of the largest of the large financial services companies, some of the largest and some of the smallest lenders. We also have credit unions, everything from a $50 billion plus assets organization all the way down to 250 million in assets from a credit union perspective. And then we also have a bunch of fintechs that have joined us today. So a great variety of attendees, which I'm really excited about, and everything in between. So we're going to go ahead and kick things off, and we're going to just show you the agenda really quickly so we can see what we're going to accomplish today. So we're done with the introductions. We're going to go through some of the analytical trends in home equity. We're going to spend a little bit of time on consumer perception on the HELOC offers. We're going to give you some amazing key takeaways that you can walk away with. And then we are going to open up Q&A either during the session. If you have a burning question that you'd like to ask, feel free to go to the Q&A section and let us know if there's an issue or if you have a question that you'd like addressed. And we're also going to reserve a couple of minutes at the end for Q&A as well. Okay, let's go to our first slide. So let's talk about the current market conditions. As you can see on this graph over to the right, the blue lines that you're seeing, those are the home equity mail volume trends since Q1 2019, slow and steady. If you look at the federal fund rates, you can see that while the federal fund rates have done what we all know they've done over the last couple of quarters, the home equity direct mail volume has remained relatively steady. And so the first thing I'm going to ask of the panel, I'm going to go right to Omar. I really want to hear your perspective. How have market conditions shifted just generally in the lending space that you're seeing?
Rich, thanks for having us on. We've been monitoring this trend and preparing for what we're seeing today in the market for the past few years. And, what we saw was market headwinds for mortgage, personal loan, auto loan origination have turned into tailwinds for home equity lending. And to give you one example of where borrowers are primed for that lender interaction, we came out of 2022 with nearly $1.2 trillion in unsecured debt as a country, and that rising interest rate environment is starting to impact that debt to income ratio, the disposable income for most Americans with this unsecured debt. And so homeowners with that level of unsecured debt are likely not going to touch their historic low first mortgage interest rates, which we've seen for the last decade and a half. Yet there's a tremendous amount of lendable equity out there, and that allows them to consolidate debt and or home improvement, college, whatever it is the case might be. There's about $18 trillion of lendable equity that's available for homeowners across the country. And so we're seeing a tremendous growth in that segment of home equity lending. And so I think TransUnion just put out a report at the end of 2022 predicting home equity lending to rise even 24% year over year from 2022 in 2023. And why is this important for lenders on this call? To me, it's a three-letter word, TAM, total addressable market. Your customers are already Googling home equity lending today. So it's between you and the lender across the street, and who is it going to be? And that's what we're going to talk about today, and that's what's exciting about going forward.
Fantastic. And admittedly, of the two people on the call today from Competiscan, Cassidy is the brighter one. So we're going to make sure that I address the next question to her, which is, I just want to know your perspectives. I mean, also admittedly, Cassidy put this chart together, which is one of my favorite graphs. But so Cassidy, what are your perspectives on, what the audience should take away from this slide?
So when we're looking at home equity mail volumes, they've remained pretty stable despite the federal funds rate increase, especially when looking at other lending products like personal loans and mortgages. We'll get into mortgage rates or mortgage volumes a little bit later on in the slides, but home equity products are available to consumers as a low rate alternative to unsecured debt. And especially as default rates are increasing, these loans are helpful to help pay down debt consolidation, either from healthcare costs or student loan debt, and just as using it for home improvements and any sort of debt consolidation and any sort of funds that the consumer might need, the funds are there for them.
Thank you for that. So we're going to go ahead and go to the next slide. And so this slide here, obviously, again, I'm going to go to our esteemed panel. Jill, so tell me about the importance of what we're seeing here, and why is it so important to know and to look at this slide?
Yeah, great question, Rich. And Omar really set up the tailwinds nicely for the rise of home equity. What we're seeing at the moment is a tremendous increase in HELOC originations. In fact, up 32% year over year, quarter over quarter, according to Adam. And HELOCs are now representing about 20% of mortgage loans in the market in Q4, according to Adam. So what we're seeing is that as that market swings, investment in marketing, investment in innovation, that's rapidly shifting to follow the market. So we have a lot of new bank entrants coming after that larger slice of a smaller pie. So while home equity has been a back burner product for many years, now it's ripe for innovation in product and delivery and distribution. So what can you do? And many of us are in that same boat where it hasn't been a lead-in product for many years. But I think starting to have those conversations now, making sure that your customer base understands how much equity is in their home and how it might be a part of their financial solution is the first thing you can do. So start by having those conversations about the amount of tappable equity. And I think it's really important to do that now because, as Cassidy will show you on the next slide, the market is following. Marketers have figured out where the market swings are happening, and you'll see that represented in the mail volume. So if you aren't doing it, competitors are.
Perfect. And that's a really good segue. And by the way, if people, if you're seeing a slide and you want some clarification, need a little bit of extra explanation, use the Q&A. We are going to have Q&A at the end, and we are recording today's session, and you will get slides afterwards. Because speaking of slides, this is another one of my favorites. I think it tells the entire story, like what Jill was alluding to. And, Cassidy, you own this one. Love this slide. What do we need to know here?
Yeah, so just as Jill was saying, originations are increasing. We're seeing that in the marketing volume. So in Q1 2022, home equity only accounted for about 1 in 5 home lending offers in the consumer's mailbox. But now in Q1 2023, home equity offers represent about 2 in 5 home lending offers. That's a pretty big increase in just a year's time, and showing the home equity space is becoming more competitive. For example, in 2022, on average, Competiscan panelists received over 5 home equity offers in their mailbox and almost 9 home equity offers in their inbox. You can see direct mail mortgage volumes fell significantly throughout 2022, but home equity products remained relatively stable and reached almost pre-pandemic levels. And home equity email volumes increased significantly in Q1 2023. They increased 158% quarter over quarter and 214% year over year. And they're reaching almost direct mail volumes, which is just so significant. And we'll get into why email volumes are increasing in the next slide with Omar.
Yeah, I agree. Like that hockey stick that you're seeing between Q4 2022 and Q1 2023. We're going to tell you the why next in the next slide. So let's go ahead and go there. So if you look at this particular chart, like if you look at basically quarter over quarter pre-screen, that percentage has remained relatively flat. But at 53% of all the home equity offers, after it decreased in Q4 2022. And Omar, what are you seeing from a macro perspective in the marketplace that might be driving this pre-screen trend?
Well, I think it comes down to, and I strongly believe that it comes down to, what is your desired business objective? What is the business outcome that we are after as a lender? And to get corporate alignment on what that is, then from there you start to peel the onion backward. And what needs to happen is redefining what pre-screening means, because at Coviance, we're talking to community banks, credit unions all the time, and the definition from this financial institution to that financial institution differs related to what is pre-screening, and that's totally okay. But the conversation, and if the conversation is about maximizing the ROI, which is why we're seeing that flat rate, there's not a tremendous amount of investment that's maybe happening. The strategic borrower targeting isn't necessarily happening at the scale it needs to happen. And to maximize ROI, you must spend a little effort, whether it's in dollars and or data analytics, to understand who is it that you're targeting. I'll give you an example. Every month I get an email notification from my bank and or credit union. Here's your credit score. And so they have access to my credit report. They know exactly how much debt I have. They know exactly what my credit scores are. They have the ability to see how much deposits is going in and out of my account, and therefore they're able to establish some level of debt to income ratio potential. They know where I live, they have access to home values, and they can determine what my lendable equity is. So having a targeted marketing feature specific to each potential borrower will yield a much stronger ROI for you. And I think, in this generation of borrowers, it's all about instant gratification. It's all about community. Do you know who I am, or am I just a data on a piece of paper. And so therefore, I feel like pre-screening needs to be redefined at a bank and credit union level in order for them to maximize that potential. And that's probably why we're seeing that flat. There's not a tremendous investment going into it, but if done well, the results will be impactful.
So you're saying segmentation?
Absolutely. And it goes back to what I was saying earlier. It's all about your TAM. Who are you after?
And to add to that, you know, to look at this, so Omar gave us the macro trends, which was spot on. Now I want Cassidy to get a little bit into the statistical trends of what's driving, you know, direct mail, email, and its effect on pre-screening statistically.
Mm-hmm. Yeah, so historically, Competiscan has observed pre-screened offers being sent via direct mail mostly, and while email offers are more invitation to apply, just getting the word out for the products. And so we're seeing more emails because they're normally cheaper, they're easier to send out. So just using both of those products to reach out to your customers, using the direct mail to get them those pre-screened, use those more expensive, as Omar was saying, use those new trends to see what your customers might actually need. And then using emails to reach out to them again and again and just really be in their inbox and remind them of your product and where they can reach out to you and apply and let them know your brand.
That's perfect. And just to add to what Omar mentioned, you know, in terms of segmentation, and this could be a whole nother webinar, you know, Competiscan with our relationship with FICO, strategic partnership, and all three major credit bureaus, we can append longitudinally risk. To Omar's point, like if you're looking for certain subsegments, it doesn't have to be a pre-screen segmentation. It could be home ownership and, you know, how much home ownership. It can be things like cards in the wallet, presence of a bankruptcy. There's over 2,000 attributes, longitudinal attributes. I think about it like my children. My son Miles is brought home a report card with a bunch of B's on it. And I took him out for ice cream because he's gotten C's and D's his whole life. And my daughter came home with B's on her report card, and I felt her forehead and asked her if she was feeling okay because she's a straight A student. So both got the same scores on their credit, on their report card, but sometimes the credit journey and how the actual member or customer arrived at that score at that time can be just as important. So to Omar's point, it can be, how did I get to this point also? So if you have that historical data with your members and your customers, that's a treasure trove of additional segmentation, not just where they are today, but how did they arrive there is something to definitely consider. So let's go ahead to the next slide. Okay, so we've done the X's and O's, all the analytics. Now we're going to get into some of the marketing. Like, okay, you've convinced me, like this is something I want to do, or this is something I'm doing already, but I want to do it better. What's the next step? So that's what the next few slides are going to focus on. Cassidy, as you and I and Coviance, we all know, Competiscan's got thousands of direct marketing, digital marketing, and email samples, just like the two that are in front of us today. What made you choose from these thousands of examples for this particular slide? What did you like?
We picked these two specifically because they're both pretty active in the home equity lines of credit space, and they're both pretty similar, showcasing the use cases for HELOCs. But I personally like the BMO piece just a little bit better because it's a little clearer and easier to understand. But I think it's most important to take away from this slide and the next slide where we get into credit unions a little bit more is to show or to make your customers want to engage with your piece and grab their attention and make them want to respond to your piece using different calls to actions.
Yeah, and just to add to what Cassidy just said, and then I'm going to get Jill's impressions. When we're talking about our feelings and insights and mentioning like what we like, we actually did the same thing with Competiscan's panel. So that's an exciting icing on the cake that we're going to do at the end. But before we get there, Jill, from a marketing perspective, very interested to hear your impressions.
Sure. And this is just one example of why I am a fan of Competiscan, because you can see what's going on in your market and across the nation. And there are a handful of marketers sending out the bulk of the home equity offers right now. So you can take a look and see what you're competing against. So these are just two examples, and they're both good pieces. The one addition I would say that Figure has is that they are adding in the speed, the ease, the urgency, and the pre-approval. So I think we all have that on demand, we want it now mindset. And it really extends into financial services now. So while in the past, home equity, when it was in its heyday in 2007, this really wasn't a thing, right? It was all needs-based. Now the consumers expect to understand how fast they can access their equity, how long will it take them to apply, and they don't want to get up out of their chair, right? They want to do it all from their phone. So making sure that your marketing pieces not only address the need and the rate, but really to break through that sea of sameness, we're going to have to figure out how to work with fintechs like Coviance, or, if you're going to build it, make sure that you are building these new capabilities that consumers expect to elevate that experience.
Yeah, and that's spot on. And just to add to what you just mentioned, Jill, acceptance in 5 minutes and funding in a few days is a heck of a claim. It's compelling. And I want to let everybody in the audience know that if you click on these images, it'll take you to the full record of interest. And so I want to see like the terms and conditions. I want to read all the legalese, because you're going to go back to your compliance department, let's say, and say, hey, we want to tell people you can get an offer in 5 minutes and funding it. That's a heck of a claim. It's awesome. And it's a great call to action. How can we do that? And so we do get a lot of phone calls from our clients to our insights team where they want to make a claim. This is why we're the best in the marketplace. You can't say that. Right? And then, well, let's pull up some examples where someone did say they were the best in the market or the fastest in the marketplace, or guaranteed approval, or things that we can't say. Well, maybe there's some examples out there that put the compliance department or the legal department at ease, or they just say, forget it, we're not going to say that anyway. But either way, we go in with a conversation where it's, hey, here's some claims that we'd like to make something similar. How can we go about doing that? Well, let's take a look at what's out there in the market. I think that's what, Jill, you were saying about being able to access these pieces at your fingertips, helping you make that conversation happen. Okay, so let's go ahead to the next slide. So we looked at some of the large financial institutions. Oh, good. So I told you Cassidy is in control today. So this is where you can see, you can open up to the full records of interest, which, when you're looking at a PowerPoint, you're only seeing part of the picture. We also, when we were comparing like a credit union with a credit union, we compared like a postcard with a postcard, or like a letter with an envelope with a letter with a windowed envelope. So we tried to make it as close to apples as we could. And so let's talk about, I'd like to go to Jill on this one to start. So same question, obviously different players. What are your impressions now that we're looking at, a different type of animal here? These are, mid-size and sometimes in some cases smaller credit unions. What are your impressions of these offers?
Great question. I mean, being a marketer is a hard job, right? Like, we are trying to fit in as marketers a lot of information in a very limited space and trying to get the consumer to take immediate action. So tough job. And I think that these all do a great job of calling out product features, rate, but I do think they're missing that elevation of experience that would make these a little bit stronger in terms of how fast, what's the process, how quickly can I get approved? Am I already approved, right? And without knowing the audience, it's hard to know if these were intended to go to an existing portfolio, but if they are, I think just again, letting consumers know how much equity they have. And if they're already pre-approved, even better, because you know so much about them, to the data points earlier that Omar was sharing, right? So bringing that in would make it even more appealing. But the key is really to test, because we could sit here all day long and give our opinion, but the consumers really hold the power. So making sure that as we're refreshing and building those muscles again in the home equity space, that you're going back into market with a learning agenda, a testing strategy, and that you're figuring out what the best promotional message is and rate and product mix, so that you get the best response and the best return on your marketing investment.
Love it. And Cassidy, can you go back to the slide that has I think there's 3 offers there. So these were the ones that we compared. And so Cassie was illustrating that you can also click through and see the entire image. So these are 3 different credit unions we put side by side. And I'm seeing we've got 5 minutes, so I want to make sure that we leave time to bring things home, and to also allude to the insights and appendix section that we built, so you guys know what's to come. So let's go ahead to the next slide, Cassidy. So let's go to our key takeaways. So Omar, you're batting first, but I'm going to ask you to kind of take us home. What do we need? What do we need to know? What are your takeaways? What do people need to walk away with today?
Well, Jill mentioned it a couple times. For me, interest rates, fees, all have become a commodity at some point. At the end of the day, it comes down to the borrower experience, and speak to that, right? Speed of process, back in lending operation efficiencies. If lenders will double down on that, then the borrower experience will move forward to being exceptional, and it really creates that excitement behind a home equity loan process. Nobody wants to pick up the phone or apply for a mortgage or a home equity loan, because we've all gone through it. 30 days go by, you have no idea what the heck's going on, when you're going to close. But having those buzzwords of fast close, similar to what we saw on some of the slides there, really creates that emphasis behind the borrower experience. But if you say it, you've got to deliver, right? And so making sure you have the technology partners alongside you to ensure you are able to deliver on that promise. And in my opinion, experience is what wins on top of everything. And then Jill will elaborate on the rest.
Absolutely, Jill, you're up.
Sure. So Omar mentioned breaking through that sea of sameness. I think winning the hearts and minds, it takes more than that great rate. Anyone can have a great rate, right? So it's the total package that they're getting in terms of how can you make that experience stand out among all of the competitors, right, who probably are promoting that same rate. So by partnering up or building the capabilities to deliver in the moment, on demand, and elevating that experience, it's going to be really critical for us. And then also, the last key takeaway, I just spoke about it the slide before, but be aggressive, right? Be bold with your testing plans and stay competitive. Make sure you know what's going on in the market, not just what you receive in your email box or what you see in your display ad, but be aware, use the right tools that are at your disposal, stay aware of what others are doing, because again, 70% of the marketing is made up right now by a handful of lenders. So be aware of what they're sending your members, your customers, by using tools like Competiscan, but see and be aware so that you can make a creative and a learning agenda that breaks through that, and you figure out what works for your organization to drive that business forward.
Awesome. And yeah, that's great. And Cassidy, any additional perspective?
I'm just going to go off of what Jill said there. Look to see who is in the same market as you, who's marketing to your existing customers and member bases, who are also reaching out to the same prospects that you're reaching out to. See what creative designs those people are using and what messaging themes they're promoting, and how you can be more competitive than them or beat them out. So you can offer a quicker approval process or any sort of little thing that's going to put you ahead.
Awesome. So we've got 1 minute. So why don't we go ahead and bring up how to get a hold of us, and simultaneously we can open it up for questions. But like I said, we got like 1 minute left. I can also mention while you're thinking of your questions that after this slide, there is an award that we've given out for a HELOC offer that our panel preferred over its competitors using a turnkey insights testing program that Jill was alluding to, like test, test, test. There's some very inexpensive ways to do that. And so just so you know, there's around 12 or 13 additional slides that we put in the appendix because we knew we'd run out of time. This is how to get a hold of our respective companies. Cassidy, we have like a couple of seconds. Are there any remaining questions before we conclude?
Yeah, there's one question that I see, and I think this is going to be a great question for you, Rich. And they said, I saw that you track mail and email volumes, but do you track any cadence of communications being sent to customers?
Awesome. I'm going to answer this in like 20 seconds. Perfect question. So when Jill was talking about like getting the message right, and Omar was talking about segmentation, Cassidy was talking about measurement, like you also have to think about how often are you going to communicate with your members and your customers? What media channel should I be using? So using a longitudinal panel like what we leverage, you can see not only what your competition is sending into the marketplace, but how often are they going after the same prospect with the same or differing messaging over time. Something else to consider. Okay, I don't know about all of you, but this was a blast. We had an awesome attendee list. Like I said, you will get the slides, you will get the recording. This was a pleasure. If you have more suggestions in the future on other topics you'd like for us to talk about, please let us know. You can contact Coviance, you can see their contact info, and then Competiscan on the left. Thank you so much for coming today to our panel. Thank you so much. I loved it. I'll do this anytime you want to do it again. This was a pleasure.
Thanks, Rich.
Thanks for having us, Rich.
Thanks everybody.
Everybody.